Hey, this is Dr. Jeff Anzalone with debtfreedr.com. First off, I want to congratulate you on your first real estate syndication investment. And I wanted to put together a quick video to walk you through the process of everything that's involved because really there's not a lot of information out there for you, the first time investor. I was thinking back, I think around 2017 when I made my first investment. And I remember all the different questions that I had, very nervous about handing over a large sum of money to somebody I really didn't know. So I know that could be a lot of questions, and I wanted to walk you through the process. So what I've done on the screen is I've taken a previous offering email that was sent out, and I wanted to break it down and go through because the email that you've got is probably very similar to this. So this was the True by Hilton Hotel that was offered back in 2021 in Dallas, and this email may or may not look very similar to it, but this is why we put in why we like this particular asset. Now, there's a couple of buttons here that are probably similar to the ones that are in your email. So this one here, of course, is to secure your position in the offering. You just click on this. It will take you to a separate tab or a separate page. You fill out your information, and then we'll get back with you. We'll confirm with you once we get all that information, and then start the process of sending you the funding instructions, the wiring instructions to fund the investment. We will give you the login instructions for the investor portal. So you'll have all that sent to you after you secure your position this offering. Now, this next button is for actually the offering details of this particular asset. And then there's some other verbiage in here about the process. So what I wanted to do is if you were in this particular asset, if you were to click here, I'm going to drag over this summary of this particular property to just very briefly go over some of the things, because again, some of the things can be a little bit confusing. Probably one of the most confusing things is if a property, if we offer two classes of shares. Some of them we don't. I'm going to take this one. This was a deal that we offered, an apartment complex in Spartanburg, and this was back in 2020. And this one actually did not have Class A and Class B shares. It just had Class B. So with the Class B, when you invest, you're able to, when the asset sells, and this projected hold time was 6 years. So when that sells, 85% of the profit goes to you, the investor, and 15% of the profit goes to the sponsors. So in this particular asset, it was only Class B shares. Now, if we look here, this one you could do A or B. So let's start off with the A first because it's a little bit easier. With the A, and we'll use the assumption you're going to make or $100,000 investment. So for this one, the whole time was projected at 6 years. So in this case, somebody, and I'll just drag this over, somebody that made a $100,000 investment, we're going to multiply 8%. So they would get projected to get $8,000 a year times 6 years. So over the course of this whole period, this person would have gotten $148,000. So you took your original investment and added up all the distributions. The cool thing about the distributions in A and B is the depreciation that will be taken from the asset that will help offset the majority of, if not all, of the distributions, whether it's in A or B. And if it's just an offering in B, of course it's that. But if it's A and a B offering, the depreciation will offset the majority of that passive income. So that means that you're going to get a huge tax savings, which in this particular one there was as well. That's Class A. So if you were to invest $100,000 in this one, I believe the projected return, it's always going to be Class B is going to be lower, and you get to participate whenever on the upside whenever this is sold. So if this was going to be paying, I believe, 6% a year, so that's $6,000 times 6 years plus your original investment. So after at the end, you would have roughly $136,000 projected. Now, as you can see, the equity multiple was projected to a little bit more than double. So that means if you started off with $100,000, then to double that, it would be roughly $200,000. So if we were to take this number, 136,000, so we'll just take the number that's projected to double minus the $136,000. So the projected profit was going to be for this investment roughly $64,000. So that's how that is calculated. So the distributions, so your initial investment, the distributions, which was $36,000, plus this profit of $64,000, when you add all that up together, that is getting you the grand total. And that's, and you can see here the total return for the investment was about a little over 100%. So again, uh, this particular property, you can go through the investment summary on the one that you're going to be investing in, but it may look a little similar to this, it may not, but it's going to show you the highlights. It's going to have the location. It's going to have the uh, of why that we like this property, and what type of growth in the area is coming in, the jobs. In this particular asset, we were comparing different hotels in the area, um, for that were recently sold, and we were actually able to get this particular property much lower price than what some of the ones were sold for. You'll have the investment highlights. You'll have the financial details, what type of loan it's going to be if you're interested in that. Um, all of the different fees are disclosed. The underwriting and the pro forma, you'll have all of that as well if you're a numbers person. Again, it'll have a summary like we just did of the projected returns. Again, this was in this particular case, this was the Class A, and then the Class B. Again, this is estimated. So, and it breaks it down right here. Now, the timeline in your particular asset that you're investing in, it will walk you through. So in this particular one, the release date, this email went out on May the 10th, 2021. Then the money that all the investors were going to be putting in, it was due by May the 28th, and then the project closed. One of the main questions that I get is, Jeff, when do we start getting our first distributions? And typically it's going to be roughly 6 months after the project closes, and then after that, it's going to be every quarter. Typically, you'll get double the amount of distribution on your first distribution just because it's 6 months. So, for instance, if you normally get a $500 distribution, your first one will be 1,000, and then after that, it would be 500, and then it would start over the whole period. This was the apartment complex. Again, very similar to the hotel. It breaks down the distribution, the savings that you're going to be getting while holding while holding the asset. Very important to realize the tax advantages in these syndications are huge. Again, property overview. And this one didn't compare any properties that were sold to it. It just had some highlights of the area. Again, all of these investment summaries are going to be different. Let's see, investment highlights. So you can just scroll through there. Again, the financing details of this loan, the fees, the pro forma. So you can see this is, once you start doing more and more of these, you'll get more familiar because we try to keep the format the same each time. This particular one, you could see the email went out February 25th, 2021. The wires were due March 16th, and then that was the projected close date, March the 26th. Typically, we'll put in some frequently asked questions. Also, whenever we release these deals, not only will you have frequently asked questions, but also we will start getting people that will ask us questions. Sometimes that is not in this section. So what we'll do is we'll usually send out another email that's updating uh, any questions that were asked about the particular asset that you're investing in that's not on this list. So we'll do that, and then again, this would break down anything pertaining to that. So hopefully, this helped you. What what is basically going to be involved with your first syndication. So I'm going to just scroll down this just to see if I missed anything. Again, the email will break down pretty much everything that's in that summary for you, and then you'll have another button to at the bottom to secure your position. So if you have any questions once you make your or during the process of you making your first investment, along the way, feel free to reach out to me, Jeff at debtfreedr.com. And we want to make this as pleasant and as seamless and as painless as possible for you. So I think that you're making a great decision with investing in these syndications. Man, I wish I would have started doing this right when I got out of practice, but unfortunately, I didn't know much about it. So the road to financial freedom with these types of investments are much quicker than the road to financial freedom investing in a 401k your entire career. So thank you for watching. Again, if you have any questions, feel free to reach out to me, Jeff at debtfreedr.com. Take care.